Hello, this is Brian Basting with Advanced Trading. This is our market report for Tuesday, May 28th. Let's talk about the markets. If we look at the corn planting progress from yesterday's crop progress report, we finally caught up nationwide. We're 88% planted for corn. That's right on the 5-year average. Now, there are still some challenges that exist with corn planting, primarily in the northern corn belt. We're looking at areas like North Dakota, maybe a few parts of Minnesota, Wisconsin. Michigan has been challenged this year. Hopefully those folks can finish up here in the next week or so. However, in terms of market support, probably that issue is taking a back seat at the moment because we have made such good progress. We've also got some news on crop condition ratings. Now, the first aggregate condition ratings for the U.S. are going to be released next week by the USDA. However, we did see a couple states publish ratings for their own individual situation. For example, in Illinois, 67% of the corn is rated good to excellent, and Indiana is at 68%. So if we're looking ahead to next week for the week ending June 1st, I think we have a pretty good chance to be 65% or above nationwide in terms of the good to excellent ratings. What does that mean? It means the crop's off to a good start. That's all it means, because we've still got a long way to go with this crop, including pollination, of course. But for the time being, I think the stands are good. We don't see a lot of drown out in terms of excess rain, widespread instances of that at least. So the crop's off to a good start. As you look ahead to this crop progress report next week, crop condition ratings are going to be the thing the market focuses on, because at this point of the year, demand is taking a back seat to the prospects for 2014. 65, maybe 70% good to excellent is weighing on the market. If we look at the December corn contract, the December corn contract traded yesterday under $4.70 a bushel. Now that's the lowest price since the end of February. Remember, the month of February was the crop insurance base period for corn. So we actually saw the market rally from the end of February to the end of May over almost 50 cents a bushel for December futures, up from about $4.65 a bushel to about $5.15 a bushel. Now it's back down to where it was at the end of the crop insurance period, under $4.70 a bushel. So that underscores how important risk management is in your marketing, because basically that crop insurance price was set at this level. The market rallied up to a higher level and is now retraced back to that level for the crop insurance-based pricing period. Again, underscoring how important risk management is in your operation. Let's look briefly at old crop prospects for corn as this crop year winds down. We're looking at excellent export demand for corn. The outstanding sales of corn are at a multi-year high. I think we're going to see exports of corn average more than 40 million bushels per week throughout the month of June here. That is very strong compared to the last couple of years. Now that's supportive of maybe nudging up that number a little more down the road in the USDA supply-demand report. But again, I don't want to read too much into that. I think it's still going to be, in terms of market activity between now and the end of the crop year, will be more dictated by new crop considerations. We also continue to see really good ethanol margins. Continue to see ethanol production about 5 to 10% above year-ago levels, with margins as strong as they are. So I'd look for that number to continue to be strong moving into summer. Feed residual usage, we're seeing some good margins for cattle, good margins for hogs. Dairy especially are doing well, and the poultry sector is pretty healthy right now. So I think the demand for corn is strong. What that underscores is the importance of raising a trend yield for 2014. Trend yield being close to 160 bushels an acre. Can we reach that? I think we can reach that. I think the market, we could see the crop do better than that. Having said that, it could definitely fall short of that if we run into problems at pollination. So wrapping up corn, I think we got the recipe for volatility in corn here. More directly linked now, though, to yield variation as opposed to demand, because we've got the crop planted in a timely fashion and it's off to a good start. Still a lot of room for volatility, though. Let's switch over into soybeans. Soybean planting progress made good progress this week. We're at 59% nationwide. That compares to the 5-year average of 56%. For this coming week, for the week ending June 1st, the 5-year average is 70%. I think we've got a good chance of meeting that or exceeding that. I would guess today somewhere between 70 to 75%, maybe closer to 75% of the beans will be planted by the end of this week. So again, concerns about planting delays probably subsiding somewhat for beans. As we go forward, though, we're just starting the growing season for beans. As you all know, the month of July and August are most crucial for beans, but we definitely have a good shot at planting that record amount of beans that the USDA said we were going to plant back in March. Demand continues to be the story for beans. We continue to see strong indications of soybean meal export demand, and while the soybean demand has backed off, switched over into South America, there's strong indications that we're going to meet that USDA export forecast for the year. We're at 96% of the USDA export forecast already for soybeans. What does that mean for beans? It means as we enter the summer time period, we're probably going to see the market need to structure itself to entice soybean meal and soybean imports. Now, we're already hearing talk of that, so the market may have already done its work to get that job done. We may have to see that still take place. Regardless, I think the balance sheet is so tight for beans at the moment that we do need to see some form of imports. And again, I want to underscore, we are already hearing talk of that happening, so the market is doing its job. Price prediction is impossible. We cannot say if the market has already accomplished that goal at $15 for July futures, but we can say at least the mechanism has started to get that work done. Again, that price volatility is something that's opportunity for your operation in terms of managing risk. The final thought I'd share with you on beans is that this planting season has just begun. Bean crop is typically made in August, as we all know, so even if we do get this record amount of acreage planted for beans, we still have room for volatility ahead of us yet. So again, record acreage, but tight stocks is a recipe for volatility in beans for the next 3 or 4 months, I'd say. Let's wrap things up with wheat. I did have a chance to travel last week to Kansas on a crop tour. I want to thank Kelly Herrick for hosting our crop tour and thank our customers for taking time to visit with us while we were out there. We saw better than expected crops in Kansas. Now, it's not a good crop, I don't want to give that impression, but it's better than expected. So as we look forward to this 2014 harvest, the market is backing off in the wheat quite a bit the last 2 or 3 weeks here. I think part of that is due to the fact that mainly the only crop problem at the world at the moment is here in the U.S. in hard red winter. Our soft red winter crop in the Midwest continues to do quite well. But overseas in Europe, overseas in Russia, Ukraine, those crops are in good shape for the most part. A little bit of dryness perhaps in parts of Russia, but those crops are in good shape. So again, we've kind of taken away the support in the market in terms of the supply concern, because our supply concern is the only supply concern in the world, and maybe not as bad as we thought after having viewed the crops last week, at least in parts of Kansas. We are looking at some crops that are struggling in Oklahoma, however, one of the worst crops they've seen in decades out there. I do think the Oklahoma crop has the potential of falling short of the USDA forecast, so we'll see how that shakes out as we get into harvest here. We'd look for harvest to start in parts of southern Kansas, probably around that second week in June. So we'll get to, obviously, the confirmation of the crop size at that point. Between now and then, the next USDA report for crop size in terms of winter wheat will be released on Wednesday, June 11th. So keep an eye out for that report. The other thing we talk about in wheat, obviously, we do have to address what's going on over in Ukraine. I think they have become one of the strongest wheat exporters in the world. There's quite a bit of uncertainty over there now, needless to say, with the political environment. That's a wild card to keep an eye on. The best we can say today is they continue to ship wheat. They continue to compete with U.S. origin. We'll keep a close eye on that, though, as you get into summer, because if some type of significant disruption in those shipments were to take place, that would favor U.S. opportunities here as we move into the summer. Our U.S. export program for wheat so far for summer has been routine. I really can't say that it's strong. I really can't say that it's weak. All I can say now is the market is about buying the same amount of wheat as they do in a typical year. I'm going to wrap things up with a couple comments on risk management. I think we really want to encourage you folks as we move into the summertime period here. We are moving into a time period of volatility. Market volatility is opportunity for U.S. producers. What we really want to underscore is we're here to help you. And what I'd like you to do is contact us at 800-664-2321 if you'd like to learn more about our risk management services. We could put you in contact with one of our risk management advisors in the country, and they could help sit down with you and tailor a plan specific for your operation. So we're here to work with you individually, and that separates advanced trading from a lot of folks. So again, please contact us if you have questions at 800-664-2321, and we'll put you in contact with one of our risk management advisors. Hope you have a good week.